Alright, listen up. What if I told you that one man, starting with practically nothing, figured out a secret code to the stock market and turned it into over $100 billion? This isn't a movie. This is the real-life story of Warren Buffett, the undisputed GOAT, the greatest of all time when it comes to investing. He's not just rich. He's a legend. He's the guy who looked at the chaos of Wall Street and saw a simple game. And today, I'm going to give you his playbook. The exact rules he used to build an empire that's bigger than most countries. This isn't just about stocks. It's about a mindset that can change everything. Imagine having a treasure map where it marks a spot that generates billions of dollars. That's what we're unpacking today. Warren Buffett didn't use crazy algorithms or some secret insider information. He used simple, powerful ideas that anyone can understand. Seriously, you, me, anyone watching this video right now. We're going to break down his top 10 most powerful rules, one by one, chapter by chapter. We're going deep into the mind of the master himself to see how he does it. This is the stuff they don't teach you in school, the real-world secrets to building insane wealth from the ground up. So, I'm challenging you to stick with me through this entire video. Don't click away, don't get distracted, because every single rule we cover is a piece of the puzzle. Missing even one is like trying to build a skyscraper with a missing floor. It's just not going to work. By the time we hit the end, you won't just know what he did, you'll understand how you can start applying these same exact principles to your own money, your own life, your own future. This is more than a video, this is a masterclass from the best to ever do it. Are you ready to learn how to think like a billionaire? Because that's the real prize here. It's not just about making a few bucks in the market, it's about fundamentally changing the way you see money and opportunity forever. We're going to dissect his brain, steal his strategies, and set you on a path that could change your life. This is Warren Buffett's 10 rules, how he became the GOAT of investing. Let's get into it, starting with the most important rule of all, the one rule to rule them all. And before we dive in, if you want more investing wisdom straight from the legends, make sure to hit that subscribe button, give this video a like, and share it with someone who's ready to level up their financial game. Let's build wealth together. Now let's get started. Warren Buffett's rule, number 1, never lose money. Rule number 2, never forget rule number 1, protect your capital at all costs. It's not about chasing risky wins but avoiding big losses. The secret isn't genius moves, it's never making catastrophic mistakes. Defend your money like a fortress. Let's go even deeper on this. Avoiding loss is more powerful than chasing gains because of the brutal math of compounding. When you don't lose money, your base for growth remains intact, or even grows. Every dollar you protect is a dollar that can work for you the next day, and the day after that. Think of it like a video game. Every time you lose money, you're losing a life. Buffett plays the game with the goal of finishing with all his extra lives still in his pocket. He's not trying to get the high score on one level, he's trying to beat the entire game no matter how long it takes. This defensive mindset is what separates the amateurs from the pros. Amateurs get excited by volatility. They see a stock jumping 20% in a day and feel the FOMO, the fear of missing out. They dive in without thinking, driven by pure emotion. But Buffett, the ultimate pro, sees that same volatility as a warning sign. He sees chaos, unpredictability, and most importantly, risk. He knows that the same force that can rocket a stock up 20% can just as easily smash it down 50% the next day. He would rather get a guaranteed, slow, and steady 10% return than gamble on a 50-50 shot at a 50% return. So how do you actually put this into practice? It means doing your homework. It means not investing in something just because your friend told you to. It means understanding the absolute worst-case scenario for any investment you make. If you can't handle the worst-case scenario, you should not be in that investment, period. This is about building a margin of safety into everything you do. You build a buffer, a cushion, so that even if you're wrong about something, you don't get wiped out. You just take a small hit, learn your lesson, and live to invest another day. Ultimately, this first rule is a psychological shield. It protects you from your own worst instincts, greed, fear, and impatience. By making never lose money your guiding star, you're forced to be more patient, more analytical, and less emotional. You start to see the investment world not as a casino, but as a game of strategy where defense wins championships. Warren Buffett didn't get to be a $100 billion man by hitting grand slams every time. He got there by consistently hitting singles and doubles and almost never ever striking out. Rule 2, focus on the value of a business, not just the price of its stock. Buffett doesn't see ticker symbols. He sees real companies like Coca-Cola with factories, trucks, and loyal customers. Ignore the market noise. Find businesses worth more than their price and buy with confidence. So how in the world do you figure out what a business is actually worth? This is where the real work comes in, and it's why so few people have the patience to invest like Buffett. You have to become a business analyst, not a stock market speculator. You have to roll up your sleeves and investigate the company like a detective. This means reading their annual reports, which is like the company's report card. You have to understand how they make money. Who are their customers? Do they have a strong brand that people love and trust? Do they have a competitive advantage, a moat that protects them from competitors? Imagine you were buying a local pizza shop. You wouldn't just look at the asking price. You'd go in, you'd taste the pizza, you'd look at their books, you'd count how many customers come in every day, you'd check out the competition down the street, you'd want to know everything about that business before you wrote a check. Buffett does the exact same thing, just with massive, publicly traded companies. He is obsessed with understanding the fundamental economics of the business. He wants to know if it will still be making tons of money in 10, 20, or even 50 years. This is the opposite of day trading. It's not about trying to predict which way a stock will wiggle in the next 5 minutes. It's about having the confidence that you own a piece of a truly excellent business that will grow and become more valuable over a very long time. The market is moody. It can be euphoric one day and depressed the next. Buffett calls it Mr. Market. He imagines Mr. Market as a manic, depressive business partner who shows up every day and offers to either buy your shares or sell you his, often at a ridiculous price. You are free to ignore him completely. You only engage when he offers you a price that is too good to pass up. This rule is a game changer because it puts you in control. You are no longer a victim of the market's whims. You are an owner, a proprietor. You are making a calculated decision to partner with a great business. When you think this way, short-term price drops don't scare you. They become incredible opportunities. While everyone else is panicking and selling because the price is going down, you're calmly buying more because you know the value hasn't changed. You're not buying a stock, you're buying a business, and you're buying it for a steal. Warren Buffett's rule: invest in what you know and understand. Draw your circle of competence. Stick to what you truly get. Maybe it's retail, maybe it's gaming. Your edge is your real-world knowledge. Buffett made billions on simple, familiar companies like Coca-Cola. Know your circle, stay inside it, that's where you win. The world is designed to pull you outside your circle of competence. Hype is everywhere. Friends brag, news screams, and it's tempting to jump in. But the smart investor ignores the noise, sticks to what they know, and builds a fortress around their expertise. That's how you avoid hype traps and grow wealth steadily. Buffett's golden rule: buy a wonderful company at a fair price. Focus on quality first, not just bargains. Charlie Munger taught Buffett it's better to own a great business with a moat, like Apple or Coca-Cola, than a cheap, struggling one. Look for companies with strong brands, patents, or network effects. Buy quality, let it grow, and wealth will follow. You found a wonderful company with a strong brand and big profits, but don't just buy at any price. A fair price means buying below its true value, giving you a margin of safety. Wait for the right moment. When the market panics and the price drops, that's when you strike, setting yourself up for massive returns. In a world of instant gratification, patience and discipline are rare. Warren Buffett says investing is a marathon, not a sprint. Before you buy, ask, would I be happy to own this for 10 years? Think long-term. That's how you win. In investing, patience means waiting for the right pitch, and discipline means not swinging at the bad ones. The most profitable action is often no action at all. Embrace the boredom. Celebrate the days you do nothing with your portfolio. This quiet discipline is the most reliable path to extraordinary wealth. Buffett's rule: be fearful when others are greedy, and greedy when others are fearful. When the market's a wild party, he stands aside, watching for danger. Most chase hype, but Buffett waits, focused on real value, not FOMO. That's how you avoid disaster and spot real opportunities. Be greedy when others are fearful. When the market crashes and panic sets in, that's Buffett's Black Friday sale. While others run, Buffett calmly buys great companies at huge discounts. He invested billions in Goldman Sachs and General Electric during chaos because he'd done his homework. Prepare in good times, build cash reserves, and make your list. When fear hits, buy value on sale. That's how generational wealth is built. Rule number 7. Think for the long term. Buffett isn't chasing quick wins. He buys businesses to hold for decades. He asks, will people still need this in 20 years? That's why he's calm during market drops. He's focused on lasting value, not daily noise. Long-term thinking is the key to his success. The real secret behind Buffett's wealth is compounding, what Einstein called the eighth wonder of the world. Like a snowball rolling down a hill, your money grows faster the longer you let it roll. Buffett's biggest gains came after decades of patience. That's the power of compounding. Reinvesting your profits is the turbocharger for long-term wealth. Like Warren Buffett, use dividends and gains to buy more great investments, not luxuries. Every dollar reinvested is a tiny employee working for you, compounding your wealth over time. That's how fortunes are built. If you want to see the ultimate example of reinvesting profits, you don't have to look any further than Buffett's own company, Berkshire Hathaway. It is literally a monument to this principle. Here's something that might blow your mind. Berkshire Hathaway has not paid a dividend to its own shareholders since 1967. Think about that. For over half a century, one of the most profitable companies in the world has decided to keep every single dollar of profit and reinvest it on behalf of its shareholders. And the shareholders, including Buffett himself, are perfectly happy with this arrangement. Why? Because Buffett is better at reinvesting that money than they are. Berkshire Hathaway started as a failing textile mill. Buffett took control, and instead of trying to fix the dying textile business, he started using its small profits to buy into other, better businesses, like insurance companies and newspapers. The insurance companies were the real masterstroke. They collect premiums from customers up front and only pay out claims later. In the meantime, they have a huge pile of cash called the float that they can invest. Buffett used this float along with the profits from all his other businesses to buy even more businesses or large chunks of public companies like Apple and Coca-Cola. This model turned Berkshire Hathaway into a diversified, unstoppable corporate giant. It's a self-contained ecosystem of wealth generation. The profits from See's Candies might be used to buy more shares of American Express. The insurance float from Geico might be used to acquire a railroad company like BNSF. All the profits from all these different streams flow back to the parent company, where Buffett and his team make the crucial decision of how to redeploy that capital to generate the highest possible long-term return. It is the world's biggest and most successful example of reinvesting profits in action. You can apply this same model to your own life, even on a much smaller scale. Think of your personal finances as you Inc. Every dollar you earn from your job is revenue. After your expenses, whatever is left is your profit. The Buffett way is to take that profit and reinvest it into assets that will generate more income for you in the future. Stocks, real estate, or even starting your own side business. By consistently and systematically reinvesting your own profits, you are building your own personal Berkshire Hathaway. You are creating a system where your money is constantly working to make more money, paving the road to your own financial freedom. Rule number 9 is to invest in yourself. Your mind, skills, and knowledge are your greatest assets. Buffett says the best investment is in yourself. Every book, course, and skill is a game changer. Investing in yourself improves every aspect of life. Unlock opportunities with new skills. Building your personal brand is investing in yourself. Warren Buffett says it takes 20 years to build a reputation and 5 minutes to ruin it. Your reputation is your most valuable asset. Every action adds to or subtracts from your brand's value. Building a powerful personal brand is a long-term game. Hone your craft, become an expert, and deliver value. Trust is priceless. Buffett's company is built on trust and integrity. Your mind and body are connected. Maintain your body, it's your life vehicle. Invest in yourself to design your future. Warren Buffett's final rule: associate with people who are better than you. Surround yourself with ambitious, positive people, and you'll rise to their level. Like Buffett and Charlie Munger, seek out those who challenge and inspire you. Your environment shapes your success. Choose your circle wisely. Building your circle of geniuses isn't just about mentors, it's about peers who grow with you, celebrate your wins, and help you up after losses. Buffett says look for intelligence, energy, and integrity. Without integrity, the first two can be dangerous. Surround yourself with people who lift you higher. Make the choice to build your circle of geniuses. We've explored Warren Buffett's billionaire mindset: never lose money, invest in what you understand, and think long-term. Compounding, patience, and investing in yourself are key. Start today. Pick one rule and take your first step toward financial freedom.